Hi, everyone, and welcome to Valley of Depth, a podcast from Archaea Media. At Archaea, we build media brands around the critical technologies shaping national security through journalism, events, and original research. That includes Payload for space, Ignition for nuclear energy, and Tectonic for defense tech. With Valley of Depth, we go even deeper, talking to the founders, investors, policymakers, and military leaders shaping some of the most complex and consequential technologies on the planet. Today's guest is Julien Barber, a partner at Emerson Collective, a mission-driven organization founded by Laurene Powell Jobs that uses a unique combination of philanthropy, investing, and public advocacy to drive change in areas like education, climate, and health. Julien's path is rare. Fusion researcher at MIT, startup founder, and now a venture investor deploying capital into some of the most impactful startups in the world. In this episode, Julien and I talk about his investment framework, the bottlenecks in scaling hard tech, and what it takes to back and build companies in the world of energy and infrastructure that operate on these 10-plus year timeframes. On to the show. Before we dive into today's episode, a quick word about Payload Pro, our premium subscription for deep dive space industry insights, analysis on trends, and exclusive research you won't find anywhere else. Each week, we go beyond the headlines with original reporting, investor perspectives, and detailed financial models. Recent topics include SpaceX's projected 2025 financials, Kuiper's business economics, and the resurgence of satellite manufacturing. We also just published our first report, The Case for Space, a 50-page investor's guide to the space economy. If you're in the business of space or just want to understand it like an insider, subscribe now at pro.payloadspace.com. That's pro.payloadspace.com. Julien, welcome to the show.
Thanks, Mo. Excited to be here.
So you have a fascinating background in that you worked in Fusion as, dare I say, a scientist. You had a startup, and now
scientist is a strong word, but yes, I'll take it.
And now you're an investor. Tell us a little bit about what kind of sparked your passion. I guess the common thread is really tackling climate and energy challenges. So maybe tell us a little bit about what kind of set you on that path.
Yeah. So it's a pretty straight path, actually. My father was a climate scientist in like the 1980s. And he was working on climate science for many years, well before it was cool. I remember back when I was a kid, so he would get like threats that he was some conspiracist, like stoking the flames of rebellion or something like that. But we grew up talking about climate change around the kitchen table. Went on many sabbaticals with him he was a professor and would kind of go to various places in the world and actually see climate change happening in real time. If it was Indonesia or Australia in the Great Barrier Reef, and especially in the high Arctic, where most of his work was done in the Canadian Arctic. And so that was kind of where I got my kickstart to it. I started to realize that climate was a problem. But he would always say that if he was kind of the guy who was building the map, scientists were mapping out where we needed to go. Engineers in my generation were the one that needed to build the ship. Right. And so I got into mechanical engineering specifically because I wanted to work in energy. Energy is by far and away the largest lever to move the needle in decarbonization, and I wanted to work in that. And not only was it it wasn't entirely climate driven. I wanted the ability for energy to kind of serve as both the foundation for human health, prosperity, also a huge economic opportunity, and also be the biggest driver to decarbonization. Is like, why would you not be working in energy? That's like a clear place to be. And so that was my plan. I was in mechanical engineering to do it. Was working in thermodynamics and heat transfer in undergrad. Got the opportunity to go to MIT to do my PhD program there. Was fortunate enough to get an opportunity to pick my choice of where I wanted to go and do my research. And just so happened there was a little lab on Albany Street called the Plasma Science and Fusion Center that was looking for mechanical engineers to help them do the thermal stabilization of their high temperature superconducting tokamaks. And I was young and bright-eyed and blue-eyed and wanted to make my mark. And fusion was obviously the holy grail of things that could really move the needle. And I was really passionate about trying to solve big problems. And so joined that group and worked on the magnet team at the PSFC on a design called Spark, which was eventually spun out into what is now Commonwealth Fusion Systems.
So at the time, just out of curiosity, when you joined MIT, did the team had they developed the magnet yet?
No. This was paper. So when I joined, there was a kind of this like. It was a paper project. It was the ARC paper has just been finished up, and this was a design project at that point. So Yeah, the main magnet was designed quite a few
So
years
it
later.
was theoretical, and we will talk a little bit more about fusion later. But I do want to just kind of get to a question about your own sort of drive behind this, because it was just a paper. You're entering into an industry where everyone's been talking about fusion so close, and
Mhm.
it is continued to be decades away for a very long time. What
Yeah.
was why was working on a fusion problem, or why did you feel like that was the right time for yourself personally?
Yeah. I mean, to be candid with you, I wasn't as thinking. I wasn't thinking. I was 22, 23, or something like that. Like I was just like going after the big fish,
Yeah, sure.
and I wasn't. I learned a lot about fusion while I was there, and a lot of that what I learned while I was at the PSFC drives a lot of my conviction in why I want to invest in fusion today, and why I do think it's an investable asset class. That we can get into that. Um, but at the time, there was a lot of people at that lab, to be candid with you, that were, in their 60s, 70s, dare I say 80s, that thought that they were going to commercialize fusion. And so I don't, by no means is there any idea that fusion is not hard, and that, the idea that fusion is 30 years away and always will be. I understand where the roots of that come from. I think, again, there are true differentiations for today that are just entirely different than the past that, again, we can get into. But I mean, part of what I did, the reason why I'm not working at a fusion company today, and don't have my PhD in fusion sciences, and ended up dropping into the program, was because I got pulled into the world of entrepreneurship and innovation, and I wanted to continue exploring opportunities to build energy technologies outside of fusion. Very specifically because, at that time in 2016, fusion wasn't going anywhere anytime fast, and so there's always opportunities to come back into it. And ultimately, I ended up moving into the private sector after taking a stab at a startup, to put poles and wires in the ground, because I was like, this was like peak IPCC. I was like, I want to decarbonize the planet. Let's go put some green electrons on the grid, and that was a good opportunity to do that. And I did that for a few years before heading over to Stanford to do my MBA.
Got it. So then post MBA, you joined Emerson Collective. So
That's
tell
right.
us
Yeah.
tell us what drove that decision.
Yeah. So Emerson was a strategic choice. I was, in the same way when I joined MIT, I was looking to take big swings at big problems, and went into fusion. When I was looking for what venture firm I wanted to join a group that was working on solving really consequential problems. I wasn't really interested in investing in incremental solutions. Like, I wanted to take big swings. And the way venture capital is structured today, it's not always obvious that not all firms are able to take those big swings, by design. Right. Some of them are, we typically say venture capital is like one thing, but there's this like huge array of what makes up a venture capital firm in the world of venture. And it's really defined by what their risk profile is and what their fund horizons are. Like, how long do they have to invest capital, and when do they have to return capital to LPs? Part of the attraction to Emerson was kind of twofold. One was like the deep technology expertise that was on the team, and the other was the willingness and the capability of taking big swings at big problems. Not in a concessionary way by any means, but just in the fact that we are a single LP fund. We're evergreen capital. We don't have certain terms that we have to invest across, and so we can take risks that others can't, and that creates alpha for us. And that's a unique form of opportunity for our capital, in that we can go after bigger problems when there's a bigger reward on the other end. And yeah, the success of Emerson and Laurene has been that over the years of like trying to solve the big problems, and get rewarded for it.
Julian, tell me a little bit about the investment process, at Emerson. How does it work?
Yeah, not exactly the same as any other venture firm. What's unique about us is, we go after what we call consequential companies, and I talked about my desire to work in these consequential areas. And for us, that's very specifically defined as companies that are both top decile venture returns, but also pursuing generational impact. And so those are the two immediate filters, right? Like, you need to be able to create huge economic outcomes while also creating huge generational impact for the world. And that's, it's rare that it's not every day that technologies have the ability to be collinear in their ability to create economic outcomes and impact outcomes at the same time. And so that does keep that's the essence of our filter. But then within that, we touch everything from energy, the environment, AI, general technology, future of work, education, healthcare, a whole bunch of things. My specific focus is exclusively on kind of like the deep tech topics of energy, environmental stuff, robotics, AI, quantum, things that you might think someone with a mechanical engineering degree might pursue.
Right. And how large is the investment team?
About 10 folks on the team today. So not a huge team, but we cover a really large breadth of things. And so I mentioned one of the reasons I was joined Emerson was kind of this like technical focus that the team brings. And I think it's really important in the world that we live in today, because, I think this is my personal view, is like venture capital really grew up in this world of, Silicon Valley in the 90s, which was all software investing, right? And that's great, but a lot of the remnants of what we define as, or what we generally think of as venture capital today, is based off of what software investing or enterprise SaaS software investing was in the 90s, which was kind of low capex, high growth, quick returns to LPs. And when we're trying to figure out how to invest in deep tech and capitalize on some of the really large opportunities in infrastructure today, I just think that's such a different process that it necessitates a different fund structure and a different style of investing, right? Like, to kind of illustrate it, right? Like an enterprise SaaS company, if you're trying to invest in that, really the risk that you're retiring is go to market, right? You're trying to like that company, what they're saying is like, I can build this thing, but if I build it, will somebody buy it? Which is really like, a lot of people can build it, but if I build it, then it's kind of like, how do I sell it simply? Which is the go to market risk is the primary concern. In hardware, right? If you think about like SpaceX or like a rocket company, the question is, can I build it? And then if I can build it, then someone will buy it, right? Like the market on the other side is huge, but it's like, I have to solve this technology problem. So it's a technology and execution challenge first and foremost. And, once you build it and you reach the unit economics that you need, then someone will take it off your hands and buy it for it from you, which are two totally different
Right.
risk problems to be solving for, right? And I think, part of my thesis with joining Emerson was, we want to be the best in class at investing in deep tech, and that requires a certain style of thinking and risk profiles, like risk retirement that can get you to where you need to be.
Right. Now, you mentioned earlier 10% investment team. Is it consensus driven? Do partners have more independence? Is that something you can talk about?
Yeah, I mean, it's a pretty consensus-driven thing. Laurene is really actively involved in the day-to-day at Emerson. It's her full-time job, and so ultimately, her and the IC are the final decision. But we have a great lateral movement to be able to explore different topics and move through the areas we want to explore.
I want to talk about the structure of Emerson, because it is structured as an LLC, which is very non-traditional when it comes to investing. But I think from what I understand, the structure allows a lot of flexibility in terms of investments, in terms of grants, in terms of advocacy, philanthropy. Does that change the way you guys think about company building and capital deployment?
No, not at all, really. We're the venture capital team operates like a traditional venture firm. We basically have three teams at Emerson. We have kind of philanthropy, policy, and investing. And we all work together. And I think one of the superpowers of Emerson is being able to have all of that talent under one umbrella, where we can quite literally use the power of the collective to help both partners on the nonprofit side, the policy side, and the investing side. But we're still, like I said, looking for this combination of top tier venture returns with generational impact, and we don't compromise on any of those things to kind of lean one way or the other. We're quite allergic to this term of like concessionary capital, right? Like there's no to really drive huge amounts of generational impact, you need to play in the capital markets to a degree, right? And so our thesis is quite simple, right? Like the companies that are going to create the most market cap over the next few years are going to be those working on the most consequential problems of the day. And so that's where we want to play.
Yeah, I mean, well, let's talk about some of those categories of companies. What categories within, let's call it climate and industrial tech, are most undercapitalized right now from your perspective?
Yeah, I mean, my focus today is really at this intersection of energy, AI, and physical industries. And that's a lot, right? Energy, AI, and physical industries cover a broad set of things. But I think there's a really interesting moment right now that virtuous cycle is really kind of geared up for. Never before has an electron been as valuable as it is today. For decades we've been working in an area of flat load growth, where we've been producing electrons for food processing or lights for industrial buildings or something like that. But now all of a sudden we have this AI boom that is just the value of an electron is, I don't even know what it is. The willingness to pay is kind of undefined at the moment. If you want to call it like, we have a $2 trillion company who's trying to maintain their lead pole position. How valuable is power to them right now? It's hard to say, but it's high. And it's definitely higher than it was before. And so that creates a really interesting opportunity in the world of energy. So topics around baseload power to feed that demand, especially grid resilience, things like that are topics that are top of mind right now. And then on the AI front, it's you want to be careful not to be caught in hype cycles. But I think it's pretty safe to say that this is not just a hype cycle. Like AI is going to be a transformative technology to how we live for decades to come. And I think the question is it going to be this form of AI, or in 2 years are we going to be talking about something else? And so you got to be careful with fast moving targets like this to make sure you can stay in front of them. But there's a bunch of really interesting things right now. And I think what makes, again, this kind of virtuous cycle of AI, energy, and physical industries really exciting is AI is opening up an opportunity to make hardware a little bit more like software was in the past. Like all of a sudden AI has the capacity to accelerate the hardware development cycle to ensure that infrastructure and deep tech hardware, whatever you want to call it, can start to iterate on the same, at faster time scales to make it more akin to kind of what software development would have been like in the past. AI itself actually is kind of, I think you can think of it as a software, but it's not, right? Like software is not really soft anymore. It's hardware, right? Like what really drives, like you can't scale AI without infrastructure anymore. And that was not really the same. That's not the same constraint that was placed on kind of the growth of, I guess the earliest growth of the internet was like that. But traditional software investing has always been like, well, the infrastructure's there, let's just go scale it. But now you can't really, there's no possible path to scaling AI without opportunities in all the physical industries and data center infrastructure and cooling and power and chips and networking capacity. And so you're now tied, the ability for this like Cambrian explosion in AI is really tied to our ability to build things and build things quickly. And thankfully, AI can also help solve that because you can start to have better simulation tools. You have these like AI scientists for different types of discovery to help push the frontiers of science and in material science and drug discovery and a bunch of stuff. So there's some really exciting things going on.
Well, you mentioned hype cycle. Well, at least particular to AI. Where do you think, at least in the areas that you're investing in, valuations are these days? Do you feel like they're reasonable?
I mean, yeah, it's a debate we have all the time, right? And I'm sure every firm is having all the time. Reasonable, I guess, is in the eye of the beholder, right? Like, they seem crazy on the surface, right? Like you're doing like $1 billion seed rounds with a piece of paper and a person. But in the grand scheme of things, right? Like a venture is driven by the power law, and you have to get, it's all asymmetric upside, and it's like you just need one. You need a couple of these to work. So if the risk is you miss out on some of these things. There's kind of logical extremes to it. Like, I don't think you're not going to see like $100 billion seeds because you just can't be a 10x to get $1 trillion company. And so there's some limit to how crazy it can get. But there's how when I mentioned that like AI is a little bit different now and that it is kind of hardware driven. Like a lot of these startups, like they're capital intensive. They need to raise bigger rounds. They need to hire more people. They need to invest in infrastructure. And so I think there will be a little bit of a talent and capital concentration wins type dynamic. And so, there's some justification to be paying some of these high prices when you have access to really great teams and really deep pools of capital to build that nice thick moat.
So I want to go back to something you mentioned earlier, which is grid resiliency, which feels like at the end of the day is one of the core foundational things that need to be solved before you can plug in any type of new energy infrastructure technology. Do you think the grid today, well, actually, I know the answer to your question is the grid ready today, but where do you think we are with the grid and how dire is that problem?
It's the bottleneck, right? It's the bottleneck to what we're working on.
And how does that,
of course,
and how does that factor into your investment decisions as well, right? Like,
it's a great question. Yeah.
Go ahead.
Yeah. So there's two pieces to this. Yes, it's the bottleneck. I think our actual grid runs at something like 50 to 60% capacity at any given time, and it's really designed for those peak moments. So like the whole grid is we have enough generation assets, plenty of generation assets, but like you can't connect because 1 hour of one day and summer and, one of 5 years, you might hit a certain threshold. So we typically want to build our grid out to make sure, and that's a good thing, right? We want reliability. So you don't want your grid operating at like 90% because, a little fluctuation could really, mess you up. And so that's part one. And so it's definitely a bottleneck. And so we need to invest in it. The second question though is like, how does that impact investing? And the concern for me with the grid, and I've been super keen on it for some time, and I think there are some really interesting opportunities, but it's really a policy problem, right? At the end of the day, right? Like the concern is that if you invest in the next cool grid tech widget to solve, capacity expansion or, dynamic line rating to boost, capacity expansion and advanced conductors, we even have superconducting technologies out there. Really what we're trying to solve though is a policy problem. It's a how do I permit these things? How do I build them over interstate lines? Like how do I convince all the farmers to give me, my square footage of land over a 500-mile stretch of conductor? And so it's if we get the policy momentum behind us, then I think that there's a path to do this. Like we've built transmission in the past. This is not hard. It's like standing up steel poles and stringing some wire that we know works. Like the reason we haven't changed conductors in 100 years is because they work pretty good. And so there is opportunities to improve on that. And so like advanced conductors are a really interesting one, I think, because they kind of decouple. They're a better solution. You can put 2 to 3 times more electrons through a given foot of wire, but they behave in the same way that traditional conductors do. And so if you do have the policy momentum that pushes things forward and all of a sudden, DC is like, yep, we're doing it, or all the states are like, yep, we're doing it, and they just start building and you have a better tool, then yeah, they'll adopt it. But the things that do concern me on the grid tech side are kind of like the more marginal stuff, things that are working more on the edge and are trying to like tweak the dials, and they're really assuming that policy and regulators are never going to figure this out, and that we need technology to kind of fine tune everything. And the concern there for me is that I think the regulators are going to figure this out pretty quickly because people are going to start getting bit. It makes sense, like I said, it makes sense that no one is on this really, because we have been in an era of flat load growth for 20 years. We've never had to build infrastructure. Anyone who ever had to do any of this is probably not even working anymore. And so it makes sense that there's a little bit of a slowness to getting the flywheel moving. But when people start paying, when you see rates rising on consumers, regulators are going to come under pressure. And I think you're going to start seeing the grid break in a way. And that'll really start to motivate things to happen. And so I think the interesting intersection of grid tech is where you can find technologies that have meaningful improvements, but also aren't kind of, marginal, so that if and when regulators start moving on this, they can easily kind of seamlessly get pulled into the fold.
So I'm certainly not an expert in this in grid data, so to speak, but I do remember seeing we have had flat load growth, but up until relatively recently, where estimates have been sort of revised upward, primarily due to data center growth. I'm kind of curious. I want to talk a little bit about this, like data center electricity usage growth. Like how much of that is like, well, we know it's true, right? We know it's true. AI needs a lot of power and tons of estimates out there. But how much of it do you feel like is hype?
Yeah, I check myself all the time because obviously I'm an energy wonk nerd who's been pro energy for a long time, and there's an element to me which is like, yay, my field is finally popular, and so I want to check that assumption always. But my inclination is that this is legitimate load growth that has real opportunity behind it, and that's based on a couple things. So I think one of the best, the classic here is like the Jevons paradox issue, right? Is like, will demand for this thing be faster than the efficiency increases that we'll see in it? And that's what, this is a paradox that I'm sure you and your listeners have heard about all the time, and has been talked about maybe in too much lately. But the best argument that I've kind of heard about it, or the anti-argument, is like, well, in the cloud world, in the era of cloud compute, we saw this happen straight up. There's some really great data you can see that shows this, there's like this going to be this Cambrian explosion in like cloud infrastructure, and that's going to cause all this power need. And then you saw this efficiency, improvements just like go to the moon, and the efficiency improvements more than outweighed the increase in demand. And that was a great example of how technology can really change how things turn out. Why I think AI is different is it's not this like linear progression, right? Like if I sell you a smartphone, there's a certain amount of data that goes along with that, right? Through storing your phone, through messaging your friends, through using email, and like that increases over time as better services come on. But it's I think of it as, you can kind of think about it as linear. Um, and so if you sell a billion smartphones, you kind of know there's a kind of this scaling piece to it. Or I'm like, okay, I'm going to need to scale up my infrastructure accordingly, and therefore scale up my efficiency gains need to kind of keep up at the same pace. What I think about is different about AI is that it's going to be much more exponential, right? Like we're currently in this moment where we're, some people, a lot of people are using ChatGPT for a bunch of things. Inference is moving along at a decent pace, but I think what's going to be interesting is this inflection point where AI starts to become like AI starts talking to AI. Agents are talking to agents. When Siri or whatever you're using on your smartphone is kind of the gatekeeper to information, and it's communicating with Model X, which is then communicating with Model Y, which is back channeling through Model A, B, and C. All of a sudden, you have this like Cambrian explosion of demand for inference, right? Because everything is communicated. One smartphone is now like a huge amount of inference. And I think that is going to be a meaningful difference from what we saw in the cloud world. And then that doesn't even account to like the next steps of what we need to accomplish in AI. Like, we have this process we have simple chatbots today, but this AGI future that we're all working towards is not going to be one of low energy intensity. And so there will be efficiency improvements along the way. But I think I'm convicted that in the next, especially five to 10 years, that there's going to be those efficiency improvements will not outpace the demand that we're going to see from this, because it's just, I don't want to say AI is going to eat the world, but our kids are going to be doing things a lot differently than we did.
So, okay, let's hang on to that kind of 5 to 10 year vision. Now we have certain demand projections of electricity, or electricity demand projections over the next 5 to 10 years. And we also have an idea of what's coming online and the power generation capabilities that we have today. What does that gap look like in your mind? Because what you're describing is a gap in our ability to demand enough, to create enough power. Like, how big is that gap in your mind? And then what types of energy generation can help bridge that gap?
Yeah. It's not as big as some people say. I've heard some, folks on various shows are talking about stuff being like, we're going to have like 10, especially in the next 10 years. I don't want to, postulate outside of 10 years, because who knows? But in the next 10 years, infrastructure timelines, it's pretty easy to see how infrastructure timelines grow, right? Like or at least it's reasonable to assume, like we kind of know how fast we can build data centers. We know how fast we can build power. If you just look at the fastest, the 5 years in which America has built like the most terawatt hours onto the grid, and you just say like, if we say that's the most power we could bring online, that's like the top of the supply end. And then on the demand side, you can kind of do it in a bunch of ways. You can look at chip demand, you can look at tokens used, you can infer through a bunch of different techniques, but our estimate is it's not going to be like this 10x delta, but you're going to have kind of this tens of gigawatts of kind of capacity shortfall that we think that a bunch of technologies are going to be well suited to fill. And so we're investors in X Energy. On the advanced fission side, we have 3 companies in the fusion portfolio that probably in the next 10 years are not going to be playing meaningful roles in that, but future looking, that's the goal with them. And then I think long duration energy storage paired with renewables is going to be the next big one to come down. I'm excited for what technologies and LDES will have to offer over the next few years.
Well, you mentioned nuclear, so let's talk about nuclear.
Yeah.
And I guess I'll say nuclear fission. And I know if Bob Baumgart was on the show, he would yell at me for using nuclear and fusion in the same breath. So let's call it. So fission, we've actually talked about in the past. Let's spend some time on fusion. What role do you think fusion actually plays? I was going to say 20 years originally, but then you said you don't want to postulate past 10 years. So let's say 10 years. So what role do you think fusion actually plays?
I'm more comfortable Yeah, yeah.
Okay.
Talking
Well, 20
talking
years.
over the 20-year timeline for fusion makes sense. So, I mean, we're going to see starting at the high level, like you're going to see commercial fusion in our lifetime for sure. That's I'll put my money on that one. The to make it more tangible though, like in the next 10 years, we're likely to see the first commercial reactor online. You mentioned Bob and CFS. They just had big news with Google and inked their first commercial contract, which was great to see. And that first arc reactor is meant to come online in the early 2030s, which will be great. And then there's a bunch of other fusion companies chasing that same goal: Helion, Zap, Exmer, things like that. And so, but hopeful that we'll see commercial fusion online in the early 2030s. But it'll take time to build again, right? Like it's not going to be 2-year development cycles. It's in the next 5 years you might see plant 2 and 3, and so by the mid 2030s, late 2030s, you'll have had the first few. And so it's not going to be until the 2040s that you start to see scale in this. And it'll be a little faster if companies like Zap or some of the or Helion or some of the smaller, more modular folks can come online and create smaller units of power and build faster. But I think that's a rough good order of magnitude, right? Like early 2030s, first commercial demonstrations. They're not going to operate as they're not going to be 90% capacity factor. They're going to be figuring things out and ironing out the kinks. Mid 2030s, you'll be starting to iron out the kinks and building 2 and 3. Late 2030s, hopefully most of your kinks will be out. Then you'll start to scale in the 2040s.
So I've learned that there's a bit of a joke in the both actually fission and fusion industries where it's like just lots of LOIs, lots of MOUs, and very little like binding contracts or real like kind of commercial exchange of capital and power. So you mentioned on Google, they signed a 200 megawatt offtake agreement, fusion offtake agreement with Commonwealth. To you, is that a serious commercial signal? Like, how do you view that?
Oh yeah, no, that's definitely a serious commercial signal. It's a binding contract to offtake that power. CFS needs to deliver that power as required in the contract, and so it makes sense for both sides. Google gets to send a demand signal, and CFS gets to have an off taker for power down the road that they can use to raise capital and attract more capital to their balance sheet. So all in all, a good thing. I think on the fissions, it's exactly what you would expect for where the technology is today. Like they aren't producing power, so it's not a contract for power, but it's a contract for future offtake, which is exactly what you would want to see at this point.
Do you think we're publicly underinvested in fusion relative to its upside?
Yeah, big time. And I could go on for this for quite some time. We're in a competitive race right now, right? Not just for AI, but for reshoring manufacturing. Like this is an important time for the U.S. to both be bringing in critical industries, investing in the future, which is going to be highly driven by AI, and all of that is powered by energy, right? And so fusion is the ultimate source of energy. It's the apex predator of baseload clean power. And so whoever develops fusion is going to have a leg up in all sorts of technologies and geopolitical issues. And so China right now is the big gorilla in the room. They're investing more than 2 times what the U.S. government is in fusion. They graduate something like 10 times more PhDs per year than the US does. Like they're putting their money behind this because they know it's the future and they have the capital to do it. And they have a lot of the infrastructure and the workforce to do it too. Like when you look at who's been able to scale up heavy infrastructure over the last 20 years, like it's China, not the US. And so there's a real competition right now that I think many folks in DC need to start to take really seriously, which is do we want to not only seed all manufacturing, critical minerals, EVs, solar, batteries to China, but then also fusion and fission. China is building 27 new fission plants right now, and the US is building 0. Like we're really making a bet on oil and gas being the future right now. And I think in 100 years from now, do we think that our coal and oil resources are going to be enough to maintain the competitive edge of the US? I would posit no. And we need to be investing those dollars and like leveraging our competitive edge, which we have the lead. Like the U.S. is the leader in fusion and advanced fission today. We just need the capital to support it, to make sure that the talent stays here and that the infrastructure and the IP stays here, because we don't want to just outsource that away. But yeah, there's a huge amount of opportunity to like us as private investors have been, to be fair, like for the last 40 years, the government has been supporting fusion at a kind of trickle pace, which has been good. But now that we're getting to this point of commercial reality, like we truly are. Like the nice thing about fusion is you have this nice product called the triple product that shows you exactly where you need to go. Right? There's not this like it's not some fuzzy undescribed topic. Like you know exactly the conditions that you need to make fusion occur. It's like cooking popcorn or something, right? Like the density, there's three pieces of the triple product. It's the density, temperature, and time. The density is like kernels of popcorn. The temperature is how hot you heat it. And then the time is how long you can keep that heat to make the kernels pop. And so you know exactly what conditions you need to make fusion a reality. What we've been working on for so many years is finding the right way to get there. So I'm sure you've seen these charts and your listeners might have seen this as well, but like you can really plot that over time and you can see the progress that fusion has made. And so when you look and you say, fusion is 30 years away and always will be, like you can see the progress in the 1960s and be like, why was anyone in the 1960s saying we were close to commercial fusion? We were literally orders of magnitude away, like probably 6 or 7 or 10, depending on the technology. We are really close now, right? Like NIF has already crossed break even in the last 3 years, since 3 years? Yeah, 3 years crossing break even. They're now up at like an 8x gain. CFS, we're quite hopeful that they're going to be the first to breach that target on the magnetic confinement side. Like we're really starting to make strides on this, and so there's real reason to get excited about fusion because humanity has never been closer to commercializing fusion energy than we are today. And so we got to press on the gas and get the capital to the talented people that need it to build it. And private capital has been doing that for the last since 2018, 2015 at the time in a serious way. But the nice part about the government and playing in this game as well is it's just an amplifier to private capital, right? Like if I could get a lot more folks on board if all of a sudden there was some commitment from the U.S. government to continue to fund this, and it doesn't have to be some subsidy or risk-based thing. Like the whole background to SpaceX, right, was the COTS program, which was a milestone-based funding program, similar to what the milestone-based fusion program is. And it's a great way for public-private partnerships to engage, right? Like private capital pays for all the risk, and the government just gets to pay for outcomes. So they can set their dollars. So if they want to say, hey, milestone X is this many dollars and Q greater than 1 is this many dollars, and then this first of a kind is this many dollars, you don't pay until after those milestones are achieved, and you're putting all the risk on private capital, which we're happy to take the risk, by the way. But as an investor, if you think of the government as an investor as well, like I would be absolutely thrilled if someone would come to me and say, hey, we're going to take all the risk off the table for you. You can just invest at various outcomes. That'd be fantastic. I'd do that every day of the year. So I'm hopeful that we can get that program stood up and funded. One of Emerson's superpowers is our policy team. It's not every day that a venture capital firm also has a great policy team that helps on a variety of issues. And so we've been doing a lot of work in DC it's just like an education gap, right? Like people, rightfully so, there's been a boy who cried wolf moment of this, like fusion is 30 years away and always will be thing, because people have always just overpromised and underdelivered. And so rightfully so, people have other things going on. We got a whole bunch of stuff happening in the world. Like not everyone's focused on fusion. But I think the upside to it is there's no closed door to fusion. No one's sitting there being like a stick in the mud, being like, fusion sucks. Everyone's pro fusion. They just want it to work. And so if technologists and investors and entrepreneurs can figure out how to make fusion work and show that the progress is being made, I think there's going to be a rush of capital and interest into the sector. And I'm hopeful that that's where we are right now.
Yeah, and I think the comparison to COTS in space and what helped propel SpaceX to what it is today, and the milestone program with fusion is a good one. I would argue that the fusion milestone program is just not nearly as big enough, but we'll get there.
No, yeah, we need B's, not tens of M's.
Exactly. So you mentioned earlier magnetic based fusion. Do you and I don't want to pit yourself against all your kids, but you've invested in a magnetic based confinement method and laser based and pulse, and what do you, if you had to choose, who do you think gets there first in terms of a commercial plant?
So a commercial plant, it's actually a fairly easy question. The commercial plant is, so much of this is driven by capital.
Yep.
You'll hear often like capital is like the biggest risk to fusion today. It's we have the teams, we have the technology, we have the talent, like we have the pieces outside of capital, and so the people who are going to reach the first commercially viable fusion plant are likely the people who have the mix of talent, technology, and capital, but really capital, right? Because this is like a multi-billion-dollar, $5 billion from 0 to 1 type of thing. And so, it's likely that CFS is in the top contender there just because of the sheer amount of capital they've been able to raise. Other companies like Helion and Zap are taking a capital light approach and are further along or are far along in their journey. But to take those capital light approaches, you're also taking greater risks, right? There's more science risk involved in those, or there's more uncertainty, and so it's there's trade offs between engineering complexity, capital intensity, and kind of plasma physics risks as well. And so uh, there's a cohort of companies coming up through the ranks right now that have a shot on goal at Q greater than one, and that Q greater than one moment is going to be critical because that's a signal to the world that fusion is getting out of 30 years away and always will be. Don't get me wrong, there's lots of risks on the other side, but it will get the capital into the system that's needed to get it to commercial viability. And so over the next, between now and 2028, like there's going to be some progress that happens, and if one or more of those companies can reach that break even moment, that will be the hype, I don't call it the hype, the momentum into the system that is required to drive more capital, more talent, more interest, more companies, and get the innovation flywheel going. And so in the next few years, I think we're going to see some great progress.
If I want you to stretch your timeline beyond 20 years. If fusion is successful, and in 20 years we do have commercial plants across the U.S., what does the world look like in 30 years? So another 10 years out, what do you think fusion enables?
Yeah. Yeah. So what gets me really excited about fusion is why I got into it to begin with and why I continue investing in it is like, if you go back since like the dawn of human civilization, right? Like we used biomass for our energy source, right? We used wood, we made fire. And so we did that for a million years. And if you look at like, you plotted out like human civilization on a timeline and looked at like GDP or I don't know, economic or health or whatever metric you want to use, some sort of productivity metric, we were really flat for a long period of time, like for millions of years while we were using wood. And it wasn't until the Industrial Revolution that we had this like Cambrian explosion of technology and advancement of like human health, well-being, economic prosperity, like globalization, like these things all kind of were sparked from the Industrial Revolution. And the Industrial Revolution was really built on the backs of fossil fuels, right? Like it was built on, we harnessed the power of oil under our feet and coal, and we were able to create the steam cycle and the like locomotion and factory lines. And that was kind of what stood up to modern technology today. And really what we have today, like the computers we're talking on, the internet that we're built on, like the power that we use in our everyday lives is still widely based on the premise or the foundation of fossil fuels today. And what's interesting about fossil fuels is they were about a 3 times step up in energy density compared to biomass. So for 3 pounds of wood, you would get this like the same amount of energy as 1 pound of oil and gas. And so that energy density allowed us to like make more productive technology, right? Like we were able to productize it in a better way. So it's really exciting about fusion and why I continue to, what I continue to be excited about and why, I think it's a great venture outcome as well is, our entire modern world, everything we use today, all of our technology we use today is basically built on a 3 times improvement over our historical or the next best option, which was biomass. Fusion offers a 7 million times increase in energy density over fossil fuels, which is like unfathomable really to think about. Like it would be like going back to the start of the Industrial Revolution and asking, folks then, like, where do you think energy will take us in 30 years off this 3 times energy intensity improvement? And they'd be, they could make guesses, but like they would have had no idea. And it would be 7 million times harder. Well, 7 million divided by 3 times harder to assume where we're going to go with that level of energy density. The big pieces there are, the big pieces of why that matters is, it really makes fusion energy a technology over a resource, right? And so you can your cost floor is not limited by what you can pump out of the ground and move around. Like it's in concept, you should be able to bring the cost of fusion down to the price of the raw materials to create it. And you don't have any geographic constraints at that point, right? You don't have rich countries that have oil under their feet and poor countries that don't. You have technology as or energy as a technology, which can be spread and disseminated across the world. It also, people like to say that fusion is limitless. It's not truly limitless. It's just practically limitless given the amount of fuel that is required. It's something like, the amount of fuel that can fit on my pinky is equivalent to like 300,000 tons of coal or something like that. The energy density factor is enormous. So fuel is not the constraining metric on cost at that point. And so, the world will look very different, and the opportunity, and we talk about it being like a huge market today, right? Being able to apex predator eat $8 trillion energy market. But that market expands when you have a bunch of, you can disseminate that energy technology all around the world, right? Like we have an $8 trillion energy market today, but most of our planet doesn't use energy nearly the way that people in America do. So that energy market starts to look really big when everyone's using energy, everyone's economic, GDP is higher, everyone's health and well-being is higher. Technologies like desalination starts to become much more viable. It's also a lot of I was always interested in water, but for me, water is not a water problem. It's an energy problem. Water doesn't leave the planet, really. There's minuscule amounts of it. It just gets distributed unevenly and often is salty or contaminated in some way. It's not fresh. But if you have unlimited or abundant energy, you don't have a water problem anymore. And so there's a bunch of things that make fusion really exciting. And I think it'll be really interesting to see what happens once it's in its steady state mode, looking back when I'm 80 and being like, wow, I really didn't see that one coming.
Yeah, hopefully one of those things is propulsion in the sense of space exploration. That would be really interesting.
Well, and colonization, right? Yeah. Being able to, it's really hard to store fuel on a rocket to go colonize another planet but if you have a 7 million times improvement in energy density, that's a pretty great benefit to transporting it interplanetary. So lots of potential benefits.
Let's leave it at that. Let's have everyone. Let's keep people wondering. Julien, thanks so much for being on the show. This is great. A lot of good directions, a lot of good comments and thoughts. So I really appreciate you being on the show. We're not going to wait until we get to commercial fusion to get you back. We'll kind of pick a time in between now and then, but would love to have you back in the future.
Awesome. Thanks, man.